Welcome back to the podcast. It's the end of the year already, can you believe it? Today we're going to be having a discussion around the Perth property market and a wrap for 2025. We'll have a detailed chat about what prices have done in the Perth market and also interest rates. We'll have a discussion around what is a good interest rate, and we'll do some crystal balling to have a look at what 2026 is going to look like. So today I've got Vish joining me. You ready to get stuck in?
Very good, let's go do it.
Great, bit to get through. What would you say for this year, 2025, was the biggest surprise for the Perth market?
The biggest surprise, I would say, would be the way that the market has continued to grow. I mean, at the end of 2024, there was predictions that it was still going to go, but maybe taper off a little bit. But we've seen it on the ground, especially in the last 3 to 4 months. It's just going. So I would say that's the biggest surprise. I was expecting it to grow, but maybe not as much as it has.
Yeah, and especially when you even talk to industry experts or people in the field, they sort of all have the same concept of, you know, the back end of the year has seen that increase again, and demand's definitely back up, and there's still a lot happening. So yeah, I think it caught everyone by a little bit of a surprise. So a big end to the year for 2025. And I guess let's have a look back and maybe add a bit more context to that. What did the end of 2024 look like? And maybe that's why 2025 was a bit of a surprise.
Yeah, well, 2024 was a huge year for the Perth property market. You know, prices had increased by over 20%. Median rents had increased. Stock levels at the end of last year were very low, at least low as far as what we knew previous to that. But there were some small signs that the market might have been slowing, right? While the stock levels were really low, they were slightly increasing towards the end of last year. Population growth was also slightly easing. And we kind of saw that in the start of 2025 as well. It kind of carried on, but like we've just discussed, the last sort of 3 to 4 months, it's really picked back up again. And funnily enough, listings now are actually lower than they were at the end of 2024. Yeah, so talking about surprises, we didn't think we could go any lower, but here we are.
And do you know what that listing number is at the moment?
It's approximately 3,000. It fluctuates, but it's approximately 3,000.
Yeah. So that's definitely a big demand, a driver for why there's these rising prices. If we're looking at 2025, do you want to just give us a bit of a recap of what the market's done in Perth, or maybe houses and apartments to start with?
So houses have grown by circa 10+%. Apartments have grown by circa 15+%. And like we were just pointing out, most of that growth seems to have come in the second part of 2025. The predictions at the start of the year was more so going to be, it might be 5 to 8%. So the fact that it's gone 10 plus is basically bringing back to the fact that it has caught people a little bit by surprise. And we'll touch a little bit later on what we think that looks like moving forward into the future. With the 2025 growth that we've seen, there's probably reasons for that. Obviously, it's the stock on market. Interest rates came down, which I'm sure we'll touch a little bit on that. And also some updates to schemes for first home buyers. All of this has just been a perfect melting pot, which has resulted in the market the way that it has been.
Yeah, for sure. And as I said, it has been at the back end of this year, which we've seen those price growth and some pretty big levels month on month for Perth as well. So we'll closely watch that.
I think last month the stat that came out was about 1.2% in growth, which is in a month, which is just crazy. And it's probably just worth noting that it's not just Perth. That seems to be a bit of a consistent thing that's happening across Australia, not in all states, but it's happening.
Happening across the board, yeah, you're right. So we touched on interest rates and cash rate, maybe a reason why prices have increased specifically in Perth. Obviously a very hot topic throughout 2025. Just want to have a bit of a chat about what that looked like.
Yeah, I guess the first sort of point to touch on is the fact that the RBA cut the rate for the first time this year in about 4 years. So it was 4 years of basically an increasing interest rate cycle. The last cut was in November 2020, where the cash rate was, wait for it, 0.1%.
Wild to
which
think
is
back.
just ridiculous given where we've been over the last couple of years. Yeah. So at the start of 2025, the cash rate was 4.35%. So I'm just going to take it back a sec. It was 0.1. It was 4.35 at the start of this year. There's been 3 rate cuts. Which were about 25 basis points each. So it's reduced by about 75 basis points. So that has really, I think, contributed to the increase in prices, simply because with every rate cut, people can borrow more.
Yeah.
And when you can borrow more, instead of putting in an offer of $800,000 in a property, you might be able to put it at $850,000. And if you open that up to the wider market, people can afford more, and therefore the prices increase incrementally.
And we've seen that with our clients, and especially Perth, that those drops, people can borrow that extra 20, 30 grand, and they're utilising that.
And again, everyone's situation is different, but as a real rough gauge, with the 75 basis points, people have been able to borrow roughly $50,000 to $70,000 more, which is a massive amount.
Difference, and that's probably seeing that price growth.
Exactly.
Were the rate cuts expected?
I would say so. Keeping in mind that the cash rate is always linked to a lot of external geopolitical factors, I would say, mainly being inflation figures, the job market, cost of living, right? So we went through a period of time where rates were extremely low, affordability was there. And as the year started playing out, those factors started to come back. The RBA had always said that they wanted to keep the inflation range between that 2 to 3%. At some point, we were sitting over 5%. So they were able to bring that back over the last couple of years with the increased rates, and they got it back to within that target band. But as we've seen as recently as the last couple of months, inflation has started to creep again, and the job market has started to change as well. So it is very fluid. Forecasts are consistently changing. We'll just have to see.
I guess those cuts were welcome to home borrowers, so
absolutely.
Everyone enjoyed them. Now, I guess one question that a lot of people do have: what is a good rate in the market? So maybe we'll start with an owner-occupier rate, principal and interest at 80%. Let's keep it clean there.
Yeah, I think you're probably a really good rate. You're probably looking at anywhere between 5.2 to 5.5. Different loan to value ratios elicit different rates. But I think you should be sitting around that mark to be ensuring that you're on a competitive home loan owner-occupied rate.
And then if we jump to the other side for an investor, an interest-only rate?
So investor rates, as we all know, comes with a little bit of a premium, and then interest-only an additional premium. So I would say anywhere between 5.7 to 5.9% is where you need to be. There's not that many people out there with a rate with a 6 in front of it anymore. Is probably a real alert. If you've got a 6 in front of your rate, then you probably need to be speaking to someone to see what can you do with that.
Have a look for sure. And as always, we like to preach, or not preach, but we like to discuss with our clients that rate isn't always the most important factor. But as you said, if you use those metrics, always use that as a benchmark to what you're on, and then get in touch to have a look at that.
100%.
There has been a few big changes for banking policy, so stuff that we look at day in, day out, which can make a big difference to our clients' position. So obviously all the different banks have different policies. What do we see as the big changes for 2025?
So I would say probably the biggest one we've realised is being the self-employed policy. So our business owners and our self-employed clients, policy has eased in the sense of what they need to provide for verification has decreased. So there are more banks in the space where, you only need to have 1 year's tax return, and that's sufficient. Typically speaking, business owners need, 2 years ABN registration. Some banks are doing 18, some are doing 12, as long as you've got that tax return. So I think there's been a wider recognition in the market that it was a bit tough for business owners, and there's lots of entrepreneurs and stuff out there that are starting their own thing, who needed that step in the market. So that's probably the biggest one that I would say. First home buyers, big topic, which we'll touch on, but HEX debt, which is something that I guess we don't really realise, or nor does the applicant, because it just comes out of your pay.
Makes a big difference.
It just comes out of your pay, and a lot of younger people have huge HEX debts, $40,000-$50,000 liabilities. So banks have opened up to that. To give you an example, if you're going to pay a HEX debt anywhere between the next 1 to 5 years, there may be some flexibility as to how that gets assessed that effectively boosts your borrowing capacity. So HEX debt. The lender's mortgage insurance waivers. It's, as we would know, it's getting increasingly harder to save a 20% deposit in Australia. Anything less than that, typically you pay a little bit of insurance. So people are always trying to find ways of avoiding that additional cost.
Or holding on to the cash as well.
Exactly
right.
right.
For other plans. So,
Exactly right. So If you're in specific professions, typically speaking, it's always been lawyers, doctors. It's really opened up to more people, pharmacists, psychologists, and then on the self-employed side, optometrists. It's really wide.
More variety now,
Yeah.
which is good, especially with our client base. It can cover a wide range of industries and professions. So much opportunity now in that space.
Exactly right. And to even some lenders just coming out and saying, we'll just do 90% no LMI across the board. Very recent changes, but these things are happening in the market. So it's important to stay on the pulse.
Need to be aware of those because they can make a big difference. What else are you thinking?
Look, it's just on that point. Typically speaking, historically, in a decreasing rate environment, banks may start to make their policies a little bit tougher, right? Whereas in an increasing rate environment, policies ease to make it a bit easier for borrowers to access money. So this year we've been in a slightly decreasing rate environment. So we don't know exactly what's going to happen, but a little indication of something that has happened recently is trust lending.
Yes.
There has been a lot of trust lending happening in the market for various reasons, right? It's advice from accountants. There's a lot of stuff out there in your TikToks and your Instagram on borrowing capacity with trust lending. So recently a lender has just completely pulled out of that space. As things move, if rates continue to decrease, then potentially policies that were quite flexible may start to become less flexible as well. So we'll have to keep an eye on that.
Keep an eye out. Yeah, we'll closely monitor that over the next few months because there could be some big changes happening there. I guess we've touched on it a little bit already, but in terms of the buyer schemes or the federal government schemes, been a lot of noise around it. All started off in the 1st of October with the changes. Yeah. What impact has that had on? Let's start with the Perth market, I guess.
Yeah, I think it's definitely contributed to what's happened in the last 2-3 months. As that was happening, a lot of people were holding off, waiting for the scheme announcement, and then it came, and then bang, they were open to it. So I guess just recapping on that, the eligibility became a lot easier. No income caps. The price points increased, not just in Perth, across the country. I think it's been very clear to see that demand has soared as a result of that. Not just with the activity that we see in the market, but in terms of what we do every day, turnaround times at banks. Yeah. So prior to the scheme, or even in the previous financial year, so the first half of 2025, banks were assessing these applications, the federal government scheme applications, in 1 to 2 days. They're now blown up to as much as 12 days. So we're not talking like a small difference. No. So if you need an indicator as to the volume of those, I think that's where it's at.
And there's been more lenders that have opened up to that scheme. So with more availability, and the blowout in turnaround time just purely shows how much demand there is for it, how many people are applying for it. So that's been a big difference.
You would have thought with more banks, quicker, it's gone the complete other way.
Gone the other way. So be mindful of that. But there is a lot of demand happening with the schemes. Now we'll chat about some crystal balling for 2026. Do some hard hitting predictions. What do we see for 2026? What are we thinking for the market?
I think all leading indicators for the Perth market can only point one way. We mentioned that listings are still extremely low. They're lower this time than they were last year. For as long as listings remaining that low, a balanced market in Perth typically is anywhere between 12 to 13,000. So we're still well below that. The bottom line is the only way that's going to get better is if more houses get built. Now, it is important to touch that building approvals and building has increased this year. Building costs have stabilised. So it is going to get better, I believe, but building a house doesn't happen overnight. And you combine that with the fact that population growth is still relatively high. Wages and income in WA are still high. So it's not a problem that's going to go away overnight, certainly not in 2026. How much it grows, time will tell. If I was to throw something out there, 5 to 8%. But we might be here this time next year with the same surprise.
Yeah,
we just don't know.
What we had at the end of last year.
We just don't know.
So, I guess as I said, all the factors are leading that way. Do we want to make comment on the cash rate and what's going to happen there? Bit topical at the moment.
Yeah, it seems like the economists have gone back and forth consistently. It's 1 month they'll provide a forecast, and then 2 months later they'll provide another forecast. The most recent forecast has shifted again. there's suspicion in the market that there may not be another rate cut for another 3 to 6 months. So it is a definitely watch this space Q1 next year to see where the statistics are and what the cash rate might do for the rest of 2026.
Yeah. And I guess the banks are going to closely follow that, aren't they? So whether that's the variable rate or maybe some fixed rate changes, we'll be monitoring that closely with what happens there.
Yeah, like I said, it typically follows that cash rate, but if in Q1 next year it doesn't look like there's going to be any more easing of rates in this cycle, then people might start to look at fixed rates a bit more. Mm-hmm. I mean, at the moment, you might get a fixed rate for under 5%. So the conversation is slowly starting to pick up. It's still not being taken up because the difference is probably not quite large enough. But with some changes in commentary and forecasts, maybe it might become a little bit more active early next year.
Yeah, something to monitor.
Exactly right.
Beautiful. You heard it here first, folks. Great tips and insight from Vish here. So thanks for joining me today, mate.
No worries, too. Appreciate it.
Merry Christmas and have a happy New Year.